Hello, this is AJ Macdonald. I have Devin Jones here in the office. Today we're going to talk to you about target date funds and what a target date fund is, why so many people have money invested in target date funds, and some of the other pros, and maybe a few cons.
Yeah, there might be a few cons. Is this for everybody?
Could be.
It might be. Yeah, it might be. So, where do you want to start?
What's target date fund?
What's target date fund?
Because almost every large mutual fund company has a target date fund. Some of the big ones, Fidelity, Vanguard, etc., massive amounts of money are invested in these things.
They are. They are. They call them fund of funds, or at least that's how we refer to them, fund of funds. So, anyway, what they are, I guess in a nutshell, they are one fund that has got a lot of other funds kind of meld up into one pool, I guess, into one account, one fund. They're nice. There's a manager that's watching over them. They're moving money around as they see that they need to. A lot of them use modern portfolio theory to invest the dollars. So, they're, I guess, what do you think? Are they 15 years, 20 years? How long have they been around, do you think?
Oh, I think 20.
Probably 20, something like that.
What's the difference between maybe a 2030 target date versus maybe a 2060?
Yeah, 2030 is going to be a whole lot more conservative, right? So here's the deal. So a 2030 target date fund is assuming that you are in a conservative class in the year 2030.
Maybe a retirement date.
As a retirement date, exactly. So
Or close to it.
Sometimes they're referred to as that.
I've heard that.
So as your retirement dates get further out, as in a 2060 retirement date, the year 2060, you got a lot of years to accumulate dollars, to ride the ups and downs of the market. And so those funds are probably going to be, not probably, they're definitely going to be more aggressive.
Yes.
As you get closer to the current date, current year, they're going to get a whole lot more conservative.
Yeah, and usually, I think always they are 5-year increments. We'd have maybe a 2025, we'd have a 2030, a 2035, etc. And the date of the fund that's closest to our current date is going to be the most conservative. And some of them, I don't know how long the longest out that I've seen, but I think it's 2065.
I've seen 65. I've yet to see a 70, but maybe they're out there. I just haven't seen
them. They will be.
They will be.
And so they're going to be a lot more aggressive, a lot more international, emerging markets, tech, and a heck of a lot less in bonds. Right. And so that's really what a target date fund is. Why would somebody want to invest in that?
A lot of 401ks are implementing them now.
Absolutely.
We've been doing this long enough where, 401k 30 years ago probably had maybe 10 options for you, and they were not a target date. You got to pick your options, manage it yourself. With these, they're almost like a default fund.
They
right?
are, yeah.
You see money go in them, somebody's minding the shop, and all you have to do is have money pouring into the things, and somebody else will manage it.
Makes it easy.
Exactly.
You don't have to, that's what we see in the 401k plans. Instead of trying to maybe build your own portfolio, which is what we do, you can just kind of pick the year you think you're going to retire, say, I'll just put all my money in there.
Right.
It's pretty easy.
It's pretty easy. I'll just expand on that a little bit. If your risk tolerance is very aggressive and you're retiring next year, I've seen people put money in the 2060 fund because they want to be super aggressive.
Yeah.
That's where you want to call us, because we want to talk through that, because there's risks. I mean, you're banking on things being pretty good economically and stable if you're going to go that route. It's certainly on a short-term basis like that.
Yeah.
So.
But these target date funds have in 401ks the most assets.
They do.
And we keep seeing more and more money pouring into them. And generally, they perform pretty well.
Yeah. It takes a lot of risk off the individual, off of their shoulders, because you got somebody else minding the shop and building a portfolio for you.
Well, I think also a lot of business owners like them because it takes a little stress and a little compliance risk off of their shoulders, saying, hey, you put it in the year you figured you're going to retire.
Great point.
Should do what we want it to do.
Right, exactly. Yeah.
So if you have any further questions about target date funds, if you should be in them, if you should not be in them, if you'd like a customized portfolio, which is what we do, give us a call. We'll be happy to talk to you. And thanks for watching.